Welcome back, ladies and gentlemen. I am Racky Ryan. We have a lot to talk about, so we are going to dive right on in. It was not a pretty week for the app Robinhood. They halted trades on a bunch of stocks, and they also halted trades on cryptocurrency. Hedge funds got destroyed, and also the Wall Street Bet Redditors and the Robinhood army have declared war. What a pleasant surprise. This morning is full of surprises, UDPV. We heard Wall Street Bets was on the warpath. We were eager to join forces. If it's blood you seek, you're welcome to join us. But you bring only these handful of soldiers. Wall Street Bets! What is your strategy? Hold! 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 I brought more soldiers than you did. I hope you enjoyed that clip with me playing Leonidas, as well as the other, whatever you would call them. So in other news related to the market, the Dow Jones dropped 800 points. The VIX, which is also known as the volatility index, rose by 43%. There's a lot of fear in the market right now. A lot of fear. Something else worth noting is companies such as Facebook had blowout earnings. I mean, the best earnings they've ever had, and the stock is down. Some people were not too pleased with what happened. Rereading the Facebook earnings call from last night, is there a business with more embedded optionality than this one? Like seriously, how are they trading at 26 price to earnings, growing revenue at 30% plus and EPS at 50% plus? When we look back in 5 years, it'll be an obvious no-brainer. For comparison's sake, Visa doesn't have like 1/10 of the optionality and growth prospects that Facebook has, and it's certainly not going to grow EPS 50% plus anytime soon. And it's trading at 40 plus price to earnings. Yeah, but mode. That's funny as well. Honestly, Livium Capital, you do have a point. Facebook had a blowout earnings. They are growing their EPS gigantically. And for a tech company at a price to earnings of only 26, that's pretty attractive. That's for a different video though. Going forward, we have a huge earnings week coming up. Massive. We have Amazon on schedule. We have Google on schedule. We have a bunch of different companies. Take a look. To be honest, no one knows, including myself, when the madness is going to end. I can tell you that some charts are showing that the market has changed its trend. I'll show you that right here. However, at the same time, that should not necessarily scare you if you're in this for the long run. If you're in this for the long run, then just make sure you hold on. It's a roller coaster.
Let's take Warren Buffett of Omaha, Nebraska. If you would put $10,000 in 1965 into his company, Berkshire Hathaway, you would have $1 million today.
If you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Warren, what do you consider the most important quality for an investment manager?
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd.
Warren, what do you do that's different than 90% of the money managers who are in the market?
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years.
Because time in the market is more important than timing in the market. And if you're in this for the long run, then 20, 30 years from now, it doesn't matter about whatever has happened today. You won't even remember it. In fact, I'm going to run my model on why I've been investing in Amazon on every single dip recently. I think it's a great company, and I think that it's going to be worth far higher than it is today. I'm not necessarily sure whether the blowout earnings that I know they're going to have is going to affect the stock. Look what happened with Facebook. Facebook probably had the best quarterly earnings it's ever had, and it dropped. So when Amazon reports probably the best earnings of all time, maybe it'll drop, maybe it'll go up, who knows. But in the long run, I know that investing in Amazon will be good. So I'm not really necessarily worried about what's happening today, what's happening last week, what's happening next week, what's happening 2 weeks from now. If the stock market closed for 5 years and I couldn't look or access or sell my stocks for 5 years, I wouldn't even care because I'm invested in Amazon. So that's something that you should always remember with investing.